Okay, let's look at kit questions from budgeting section. Okay, let's start with the first section. Okay, which of the following would be considered objectives of budgeting? If you saw in theoretical parts, we saw that it was coordination, communication, expansion, not resource allocation. So coordination, helping one department with another department, linking it. Communication from bottom up, top down, maybe within departments. And resource allocation, using budgets, we know what to give which department. Okay, what does the statement sales is the principal budget factor mean? Remember, principal budget factor or limiting factor or binding constraint, it means the same thing. It is something that limits activities of organization. When sales is principal budget factor, it means sales is limiting factor, which means sales is limited. Our activities cannot be more than that. It would not make sense to have activity more than that. So it means level of sales will determine the level of cash at the end of the period. Level of sales will determine the level of profit. The company's activities are limited by the level of sales it can achieve. Sales is the largest item in the budget. It is C. If sale is limited, then every other activity will be limited to that. And sales will not determine the level of cash because sales can be credit, it can be cash, and it doesn't determine profit as well because there are costs that are involved at different activity. There will be different profits. So C is correct. Okay, what would total production cost allowance be in budget flex at 83% activity to nearest dollars? QDC Co. manufactures a single product and an extraction from their flex budget for production costs is as follows, with material, labor, production overheads, and then 80% activity and 90% activity. It is not told what is 80% activity, what is 90% activity. You could just assume that 80% means 80 units, 90% means 90 units. It will make it easier. So in a question like this, we have to see whether these costs that are given are variable or semi-variable or fixed. If they are same for both level of activities, then you know it is fixed. If they are not same, it doesn't mean they are variable. They could be both a variable and fixed, which means semi-variable. So we have to find that. So what I'm going to do is take activities divided by units, cost, and divide by units to see whether the costs are variable. If they are same per unit, then I would know that they are variable. What about nonlinear variable costs? Nonlinear variable costs will not be in questions like these because you will not know, there will be no way of knowing how much is it per unit. So 2120 divided by 80 and 2160 divided by 90. So it is not same, it means it is semi-variable. And let's look at the last one. This is also not same per unit. So this is variable, no problem here. We only have to calculate, find the variable and fixed for the semi-variable. So 2160, the cost at high activity minus the low divided by high activity divided by low. So we have 4 variable bits and then taking activity minusing variable bit from it to give us fixed. Doing the same thing here, 4080 minus 4060 divided by 80 and 90 minus 80 becomes 2 variable. Now take any activity minus the variable bit from it. You have the fixed. Now take the variable cost, which is in all three of them. So let's take 83 activity, take the variable which is 30 plus the 4 plus 2. So instead of multiplying it separately, combine it and multiply it once. So 29, 88, and just add the fixed bit because fixed would not change. So 86, 88. So remember, don't assume that because costs are changing, they would be variable, and then just looking at it at what activity. Look at both activity to be sure that they are not semi-variable costs. Which of these statements is untrue? Spreadsheets make calculations and manipulation of data easier. Yes. Spreadsheets are very useful for word processing. Budgeting can be done very easily using spreadsheets. Spreadsheets are used for plotting graphs. Okay, first one is correct. Yeah, spreadsheets, very easy to do budgets. It is very easier for me to answer questions in spreadsheets as well. Spreadsheets are very useful for word processing, so it doesn't make any sense. They're easy for budgeting, they're easy to manipulate, and we can make graphs as well from spreadsheets. It has the features from which you can make graphs. Next, the formula C2 will give you the contents of sales drop-down list. Okay, we have this question related to 10.5 and 10.7 up to 10.7. And what would be the formula for March net profit? What would be the formula to go in G8? Okay, we have A, B, C, D, G, F, G. There is no E. F sales, cost of sales, gross profit, expenses, and net profit. Okay. The formula C2 minus C3. We have C2 minus C3 equals C4. Equals C4, which is 10A. So these are straightforward things. You should be familiar with it. What would be the formula for March net profit? March. Okay, we have to select one here. So it would be this D4 minus D5. Yeah, D4 minus D5, which is this one. And then what will be the formula to go in G8? G8. Okay, means net profit percentage, which would be net profit divided by sales. So G6 divided by G2. G6 divided by G2. And multiply by 100 to give you that percentage. Okay, next one is also Excel. I will leave this. What was the volume variance for last month? Volume variance, it is total variance. Total variances of all variances. They are further divided into, which is volume and expenditure. Volume variance looks at the difference in cost because of change in units. In this question, missed equals budgetary control report for last month is as follows. We have fixed budget and then flexible budget and then actual cost. So when we look at fixed budget, the original budget, and we compare that with the flexible budget, it gives us volume variance. The reason is we have made everything else and we have changed it according to that quantity. So we want to know, because of quantity, how much is the change in cost. Obviously, the higher the units, the higher will be the cost. Remember, this is not fixed overhead volume variance. This is general volume variance. So if we take 130,000 minus 126 minus 138.55, we have 4755 adverse. Obviously more units will give you adverse, but what it means is we have spent more cost because of the units, or you could say because of more units we will have more cost. So A is correct, the answer. What was the expenditure variance? Again, this is not the fixed overhead expenditure or variable overhead expenditure. It is overall expenditure. Overall expenditure is, we are saying the increase in cost not because of the activity, because of our spending of more or less, which is when we take the flexible budget and we compare that with the actual results. We are saying, okay, we have adjusted the cost according to the units. If we have still spent more or less, it means we have actually spent more or less not because of activity, which is 130,855 and 133,580. So we have adverse. The reason is because we have spent more than we should have. Okay, next, for a period, budgeted production and sales was 8,000 units, while actual production and sales were 6,000 units. What is flex budget profit? So it is flexible budget answer. So I will skip this one. What is the flex budget profit at an output level of 6,000? Let's see this one. Budget costs and revenues for an output level of 4,000 units are given below. It is known that after an output level of 5,000, there is a step up in cost of 1,000. Okay, we have sales price, variable cost, fixed cost, and then profit. So what is profit at 6,000 units? Remember, don't do calculation for sales and variable cost separately. Just calculate contribution, which is 30 minus 18, which is 12, and then directly multiply that by the units, which will give you total contribution. And then from this minus the fixed cost, which is, remember, this is for budgeted units of 4,000 units. So 4 multiplied by 4,000, it means 16,000 is the fixed cost here. So minus that. And also at 5,000 units, there's 1,000 step cost. So minus that as well, because 6,000 is more than 5,000, we would minus that as well. So we have 55,000 target profit for 6,000 units. So be very focused on the cost behavior. Which formula would calculate contribution? Calculate contribution would be, instead of first looking at the Excel bit that is given, first look at the data and then find it here. So it would be sales minus variable cost. They're asking for contribution. So it would be sales minus variable cost, which is, both of them is in B. So, and this is B2 and B3. B2 and B3. A. What figure should appear in cell E5? I will leave this to you guys. Okay, we have next section. What does a master budget comprise? Remember, a master budget is statement of profit or loss, statement of financial position, and statement of cash flow. The budget is statement of profit or loss. It is, yes, but it is not the only one. Budgeted cash flow, profit and loss, and financial position is this one. The budgeted cash flow, the entire set of budgets. B. If a company has no production resource limitation, in which order would the following budget be prepared? So this word shouldn't confuse you. What this simply means is that the sales is budgeted. When sales is limited, everything else has to be done according to the sales. So when sales is limited, we start with the sales budget, and then everything else follows with that. If production resource is limited, which means it is less than the sales demand, then we have to first prepare budget for that resource. For example, if material was limited, the first budget we would make is for the material. And from that, we would make the production. From that, we would make the sales. But normally, in questions like these, sales will be limited. So the first thing we would start with is sales budget. From sales budget, we prepare production budget. And production budget, we need the opening inventory, the closing inventory, and the sales demand. Finished goods inventory, yeah, we know that. Once we know the finished goods inventory, we will be able to make our production budget. Once we know our production budget, we need to find the material usage budget, how much material will be used in production. And from material usage, then we have to know how much opening and closing inventory we need. And then finally, the material purchase. So the order is 2, 4, 5, 1, 6, and 3. 2, 4, 5, 1, 6, and 3. B. Okay, I will leave some questions here. When preparing a production budget, what does the quantity to be produced equal? Means production budget, which is sales demand plus closing minus opening. Remember, this is not cost of sales. Cost of sales is opening inventory plus production minus closing. But when we are calculating production, we opening and closing sign changes. Opening is added, closing is added, opening is minus. So sales minus opening plus closing. Okay, the quantity of material in material purchase budget is greater than the inferred quantity of material in material usage budget. Which of the following statements can be the situation? We are purchasing more material than we are using. So what could be the reason? The reason could be inventory of raw material is increasing or decreasing. Wastage of material occurs in the production process. We already consider that in material usage budget. Finished goods inventory, it is already considered in usage. Raw material inventory are budgeted to increase. Yeah, when inventory are budgeted to increase, we buy more than we are using. Okay, how many units of R should be produced next year? Company plans to sell 24,000 units of R next year. Opening inventory of R is expected to be 2,000 units. We can minus that. And PICO plans to increase inventory by 25% by the end of the year. So what you can only do is take this 2,000 and multiply by 25%, which is 500 increase. So the reason your production is more is because of the change in inventory. So just look at that change and add it to your sales, and that would give you your answer. Like if I find the closing inventory here, which means I have to multiply by 25%, and then I take 24,000 minus 2,000 plus 2,500, it should give me the same result. What is the production budget for for December? Budgeted sales of X for December are 18,000 at the end of the production price for X. 10% of production units are scrap as defective. Opening inventories of X for December are budgeted to be 15,000 units, and closing inventories will be 14,400. All inventories of finished goods must have successfully passed the quality control check. Okay, so whatever we produce, 10% of that is going to be wasted. So first find the production and then remove the wastage. Sales is 18,000. With this, we will minus opening inventory, 15,000, adding the closing inventory. This is our production if production is good. But 10% would be wasted. It means it will be only 90%. So 16,000 is what we need to produce. So when 16,000 is produced, some of it will be wasted, and we will have the closing inventory. Okay, next. I will leave this to you. What is the direct labor hour budget? Each unit of product echo takes 5 direct labor hours to make. Quality standards are high, and 8% of unit are rejected after completion as subunit. Next month's budgets are as follows: opening inventory, closing inventory, and sales. So first thing first, let's prepare production budget, which is sales minus opening plus closing, which gives us production, but good. 8% would be wasted. So this means this is only 92%. So 45,000 units would be needed, and each unit takes 5 hours. It means 225,000, which is D. What is the total budget hour cost for next period? I will leave this one as well. Which of the following statements are true? A flex budget allows business to evaluate a manager's performance more fairly. A fixed budget is useful for defining the broad objectives of the organization. Relying on fixed budgets alone would usually give rise to massive variances. All of them is correct. Flex budget is more fair. Fixed budget is used as a long term. And if we only rely on fixed budgets, there will be massive variances. Next, what is the amount of budget? What is the amount of budget to be received from credit sales in September? This is a cash budget question. In cash budget question, you don't have to prepare the whole budget. Just focus on what is being asked. So it is only asking what is the amount that is going to be received in September from sales in September, and we will only focus on September. Okay. The details have been extracted from the receivable collection record of SECO. Invoice is paid month after sales. It means 1 month later, 2 months later, 3 months later. 3% becomes bad debt. Invoices are issued on the last day of each month. It means every month. It simply means that 35,000 1 month later will be July. Because if these sales were made at the start of the June, then they would be collected by the end of June. So it simply means they assume they happen at the end of the month. Customer paying in the month after sales are entitled to 2% settlement discount. Credit sales value for June to September are budgeted as follows. Remember, we will only focus on September. So for June, September is 3 months later. So from June, which is 35,000, only 12% would be received, because after 3 months, only 12% is received. For July, it would be 2 months later. So 2 months later, we receive 25%. And for August, it would be 1 month later, which is 60%. And they will receive 2% discount. And none of the sales in September would be received in September because there is no cash sales. So when I add all of them together, I have the amount that I will receive in September. So only focus on what is being asked. What is the value of sales receipt to be shown in cash budget for May? So only May. BRL PLC is currently preparing a cash budget for the year 31st March. An extract from its sales budget for same year shows the following sales: March, April, June. 40% of its sales are budgeted to be for cash. Of its credit sales, 70%. See, 70%, 40% becomes 110%, but remember it says of its credit sales, which means 60%, 70%. So 70% of the 60% are expected to be paid in the month after sale and take 2% discount. Cash sales don't have any discount. On cash sales, maybe we give cash discount, which is not usually recorded in sales. 27% are expected to pay in second month after sale, and remaining 3% becomes bad debt. We don't care about bad debt because bad debt is not cash. Okay, so we are focusing on May. So May sales, which is cash, 55,000, which is 40% will be received in May. And then for March, it is 2 months later, and second month receives 25%. So March's sales, which is 60%, 60,000 multiplied by 60% is credit. Of the 60%, 25% would be received, 27% would be received in May. So 60%, 27%. And then April, 1 month later, so of the 60%, 70% would be received, and they would receive 2% discount. So adding all of them together, 22,000 plus 9720 plus 28812, which becomes 60,532, which is A. This is also a cash budget. What is the figure to be included in cash budget for June in respect of payment for purchases? This relates to two questions. And wages are paid 75% in month of production and 25% following month. What is the figure to be included in cash budget for May in respect of wages? Each unit of product zeta requires 3 kg of raw material and 4 direct labor hours. Material cost 2 per kg. Direct labor hour rate is 7 per hour. The production budget for zeta for April to June is as follows. Production and raw material opening inventories are budgeted as follows. We have 3,800, 4,200, and 4,100. Closing inventories for June is 3,900. And which month are they asking? Material purchases paid for in the month following purchases. Means 1 month later. What is the figure to be included in cash for June in respect for payment for purchase? It means whatever we buy in May will be paid in June. And it is not the production. We might buy more or we might buy less. So we have 8,400. These 8,400 are units, and they require 3 kgs per unit, which is 25,200. Our opening inventory for May would be 4,200. We can minus that, and closing inventory is not given, but opening inventory for June would be closing inventory for May. We can include that. 25,100 multiplied by the rate, which is 2 per kg, will give us 50,200 will be purchases that will be paid in May, made in May, but paid in June. Wages are paid 25% in month of production and 25% following month. Now, wages doesn't have anything to do with material. They are directly linked to the production. So they're asking about May, 25 75% of the May and 25% of April. So 7,800 multiplied by 25% paid following month. They take 4 hours and each hour is paid 7. So we have 54,600 plus the production of May, 75% paid. Each of them take 4 hours at 7 per hour. So 54,600 plus 176,400 becomes 231,000. Next, sales budget, I will leave there as well. This also relates to sales. What is the budget cost allowance for an activity level of 4,000? This is just high-low question. Find the variable and fixed cost and then multiply by the units. What is the payment? Again, cash budget. We'll leave this. Which of the following control actions should be taken to eliminate adverse direct efficiency variance? If efficiency variance is adverse, it means labor is working slower. So it simply means how can we make our employee to work faster? Employ more highly skilled staff. If we employ, remember, one is rate and another is efficiency. So efficiency means working faster. Employ high skill labor. Yeah, if we employ high skill labor, then they would work faster. Ensure stricter supervision of labor workforce. If we make our supervision strict, what that will do is then employees will avoid idle time. So that could also work. Ask employee to work overtime. Overtime doesn't have anything to do with efficiency. It's only 1 and 2. Which of the following variances for last quarter are worth investigation? X department is a division of WPLC. X current department usually has a quarterly wage of 4.5 million. Quarterly material costs are usually 2 million. WPLC made a central division to award all employees wage increase of 2%. Which of the following variances for last quarter are worth investigation? Direct material price variance 400. Worth investigation means if they are material. 400 variance in something that is 4.5 million is not worth investigation. Remember, management by exception means focusing on important thing. Labor rate 90,000 is significant, but see, we have 2 million and the department said that there would be a 2% increase. We have departmental, 4.5 million is the labor, and 2% becomes exactly 90,000. So if a rate is adverse, that means that it has not been reflected in the budget. Sales volume variance of 4,000 favorable. Now it is something that needs to be investigated. So this is something that is material. It's only 3. Which of the following best describes purpose of flexible budget? Okay, I will leave this to you as well. Again, another one. Excel, we will leave this as well. Which of the following illustrates one of these limitations? Participation by staff in budgetary process is often seen as aid to the creation of realistic budget and to the motivation of staff. There are, however, limitations to the effectiveness of such participation. Participatory budgets are good, but they are not always good. There are some limitations to it. So what are those limitations? Participation allows staff to buy into the budget. What it simply means is when lower level are involved in budget, they will accept the budget. So this is not limitation. Staff suggestion may be ignored, leading to demotivation. This is correct. If you ask people for their opinion, and then they give you opinion, and then you ignore them, it will create more demotivation. This is correct. Staff suggestion may be based on local knowledge. If they're based on local knowledge, they will be better knowledge. So it is not a limitation. Budgetary slack can be built into the senior manager as well as staff. Budgetary slack is usually made by the lower level because they are the one that will be judged based on the budget. This is not a limitation of the high. This is not something that is done by the top level. Which of the following statements about budgeting and motivation are true? A target is more motivating than no target at all. Yeah. The problem with a target is setting an appropriate degree of difficulty. Yes. If you make it too difficult, then it will create demotivation. If you make it too easy, it will also create demotivation. Employees who are challenged tend to withdraw their commitment. It is not true. Usually people that are challenged, they become committed. Which of the following describes top-down budget? I'll leave this to you as well. In which of the following circumstances is use of participation budget process appropriate? In decentralized organization, when acceptance of the budget as fair and equal is essential, when organizations, different units act autonomously. All of these are qualities where participative budget is good. When departments are separate, where the budget needs to be fair, they will be fair if they are participatory. And if each department is working separately, so obviously they have to make their own budgets. Which of the following best describes controllable cost? Controllable cost is a cost that is controllable by department. A cost which can be forecasted and is therefore readily controllable using the budgetary control techniques. A cost which can be specifically identified with particular cost object. A cost which is easily controllable because it is not affected by fluctuations in level of activity. A cost which can be influenced by its budget holder. Okay, the first one, costs which can be easily forecast and therefore readily controllable using budget control techniques. A cost which can be forecast is the example of a direct cost. Direct cost doesn't necessarily have to be a controllable cost. A cost which can be specifically identified with a particular cost object. This is also a definition of direct cost. Direct cost doesn't necessarily have to be controllable cost. A cost which is easily controllable because it is not affected by fluctuations in the level of activity. Usually when things are not affected by activity, it means they are fixed costs, and fixed costs are not usually controllable costs. A cost which can be influenced by a budget holder. This is example of controllable cost. So whether it is fixed, whether it is variable, if it is affected by our decision, then it is controllable cost. Capital expenditure budget. You are currently employed as a management accountant in an insurance company. You are contemplating starting your own business and considering whether or not to start your own business. What would your current salary level be? A sunk cost, an incremental cost, an irrelevant cost, an opportunity cost. Remember, relevant cost I will only explain what your current salary is. That is what is being asked. You are starting a business, which means you will not have your current salary. Is it a sunk cost? It is a cost that is already gone. It is incremental cost. Is it something that is you will incur additionally? Is it irrelevant, or is it opportunity cost? Remember, opportunity cost is when you choose one alternative or another. The benefit that that is foregone is called opportunity cost. If you start your business, the income you receive from your salary, you will not have. If your job was already gone, you didn't have a job, you couldn't find a job, then it would be a sunk cost. It would be an irrelevant cost. A decision-making cost. Remember, a sunk cost is an irrelevant cost. So both of these options are the same. A decision-making cost, which needs to be considered, are said to be relevant. Which of the following characteristics associated with relevant cost? Future cost, unavoidable cost, incremental cost, differential cost. Relevant cost topic is actually relating to investment appraisal. I've already made a video on it. You can check that and then come back to this one. But I will explain relevant cost in investment appraisal as well, which is the next one. So relevant cost has three qualities. It should be future cost, it should be actual cash flow, it should not be notional cost. Future cost, unavoidable costs are not relevant costs. Incremental additional costs are relevant costs. Differential costs are the costs of two different options. So 1, 3, and 4 is relevant cost. What is the relevant cost of machine to contract? I would suggest look at this question after we do project appraisal. Which of the following would be part of capital expenditure budget? Purchase of new factory premises, replacement of existing machine, refurbishment of existing factory premises, purchase of raw material. Other than raw material, the purchase of new material, new machine, replacement of machine means you're buying another one. Your refurbishment means you're spending heavily on it. So all of them, remember, this is not repair, it is refurbishment. So all of these three will be included in capital expenditure budget. So this is it for budgeting.